So I think that Bitcoin over time is, in 10 years' time, it's probably a $50 trillion asset or so. So that's a 50x from here. Maybe it's less, maybe it's $20 trillion.
Hello and welcome to Wealthy Value. In today's video, Real Vision CEO, former hedge fund manager, and cryptocurrency bull Raoul Pal updates about Bitcoin's adoption, the difference between the applications of Bitcoin and Ethereum, and long-term outlook for the cryptocurrencies. Make sure to stick around till the end of this video where Raoul Pal predicts about a potential outbreak in Bitcoin's market cap and explains why he thinks that Bitcoin's price will multiply by 50x in the coming years. If you liked the video, don't forget to give it a thumbs up, subscribe to the channel, and turn on the post notifications. Let's dive right into the video.
We're all on that same journey. So if anybody tells you they know what's going on or where it's going, they're lying. We don't. It's all new. It's the fastest adoption of any technology in all human history. So the internet was previously the fastest adoption of any technology. This is growing at twice the speed. So currently there's 300 million users of crypto worldwide. It's growing at 185% a year. So that means by next year, you're at 700 million people. And then the year after that, you're at 1.5 billion people. Most millennials are now in their early 30s. And in their early 30s, they look at the world and they look at their income and you can't buy a house. And the stock market is expensive. It's at all-time record valuations, and the bond market and all of the investment world is incredibly expensive. And so you're stuck where, okay, you start saving a few $100s a month. The problem is there's no interest rates on your money. So it doesn't grow. But meanwhile, the cost of everything goes up more. So you're actually getting poorer, so you have to save more and more money, and it becomes almost impossible. So what is the factors playing out here? Why is this becoming so difficult? Well, we used to have higher interest rates, but because of this huge baby boom population who are retiring, plus the amount of debt in the system, interest rates have fallen for 3-4 decades now to now zero. So nobody gets any interest on their money. But we still have inflation. So the normal cost of goods normally has been running at like 2% a year. So unless your income goes up or you save more and more and more every year, you're kind of behind the game. But then there's another crazy thing happened. When interest rates hit zero and we got to 2008, that famous financial crisis, the central banks started using something like the Federal Reserve, being the central bank of the United States, started using a different way of trying to stimulate economic growth and save the banking system. And that was called quantitative easing, which is a fancy word to say we're going to print more money. And when you print more money, you devalue the money. And that's what's going on with money. They're debasing it, which means that they are lowering the value. Now, you don't see it very easily. All you see is that these asset prices keep going up. Every time they do this quantitative easing magic, the price of the stock market goes up. And the price of housing goes up. And the price of crypto goes up. And everyone's like, well, I can buy less of it now suddenly, but my income hasn't gone up. That's debasement. Bitcoin is still the big daddy of the space. And it's the OG. It was the first one to launch. Now, Bitcoin has some very unique attributes, which is that it is, got this very restricted, understandable, knowable, non-changeable supply. So you know how many Bitcoin are going to come onto the market every year, and when that stops, when we get to 21 million. It's also the way it's constructed is a proof of work mechanism, which means that there's lots of computers around the world, Bitcoin miners they're called, who have to solve this complicated algorithm, and it's expensive, you need huge computing power. And that network of miners basically protects the network. So there's not a single person that validates everything. It's all of these people. So Bitcoin is incredibly secure and robust. System of money, meaning for savings or collateral, the things you borrow and lend against, it's amazing because it's so understandable, knowable, definable. It is slow because it requires all of this computing power, and expensive to do things on. So it has not been used as the kind of applications layer. It's kind of the base layer of the money system, the new digital money system. Ethereum comes along and it does something uniquely different. But Ethereum said, well, if we can make contracts code, then almost anything in life is a contract. Me coming on your podcast is essentially a verbal or written contract over email, right? Almost everything in life is a contract. So therefore, if we can record all of these contracts and make them transferable in this new world, then we've created the whole applications layer for money, the internet of value, and everything else. So Bitcoin is more single use case specific, but very powerful in what it does. Ethereum is like the whole internet. So it's a much broader thing. And they're very different. And people try and compare them and say, well, one's not the other. And they're not supposed to be. They're both amazing in their own way. The next phase for Bitcoin is being used as a long-term investment asset for, let's say, there's these things called sovereign wealth funds. And they're generally countries that have stuff like oil that's going to run out eventually. What they do is save some of the excess money that they make for the future of the country. We will see some countries, smaller countries that have problems with their currencies, holding it in their reserves. And we will see borrowing and lending layers like we're seeing with Luna right now, using the collateral of Bitcoin for their stablecoin. So that's what I think about Bitcoin. It'll be that kind of pure vehicle for long-term savings and wealth holding. So I think that Bitcoin over time is, in 10 years' time, it's probably a $50 trillion asset or so. So that's a 50x from here. Maybe it's less, maybe it's $20 trillion. But the whole space, it's going to be $200 trillion. And it's currently $200 trillion now. It's really hard for people right now because there is so much change. We've got the system of money changing, how we transfer, store value around the world in ways that most people can't comprehend. Your mum's going to be scratching her head going, I don't understand this. NFTs, what is this? This is all, right? Because it's fear of change. She knows her checkbook and she knows her credit card and she knows, but that's happening at every level, from AI to data sciences to biotechnologies to EVs and green energy to cryptocurrencies. I mean, it's happening at scale. Robotics, space. It's all happening at a speed of which humans have never gone through before. I call it the exponential age. It's the fastest period of change that mankind has ever lived through. And we're right at the epicenter when all of these things are going exponential. I mean, just look at the number of electric cars from 10 years ago, and where it'll be in another 10 years will be 5 times where it is here, or 10 times. Same with the number of satellites going to space, where it's now cheap for even a university to chuck up a satellite to monitor climate change. Yeah, so in terms of wallets, there's nothing we can do about that. But wallets, having a cold storage wallet makes yours more secure, and the ability for you to cross borders. So let's say you don't like the government you're in. Let's say you're living in Russia or you're in Ukraine and you have to leave. Well, your wealth becomes instantly transportable. So that is a beauty of this system. In terms of regulation, there's going to be some sort of grand compromise. But what we're learning is that the more people adopt this before the regulation happens, the more voters they have to fight against if they're going to be hard on it. Particularly because of the demographic. It's this big millennial group that's the big users of this. These are voters who were not really big voters. But now they've got an issue that they would vote for because they have participated in this whole ecosystem. So I think we're going to see a lot of pushback on excess regulation. There'll be some regulation, that's fine. That's the compromise we will have to reach. But we will push back against bad regulation.
So what are your thoughts about Raoul's $200 trillion prediction for the combined market cap of the crypto space? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.